Hello everyone. The banking sector is changing on a global scale. Therefore, this is the perfect time to take advantage of the paradigm shift in the way the banking sector adopts technology to enhance customer experience. To discuss what this change is and how it is impacting the banking sector, I'm very excited to host today's roundtable as part of our one-day event cashing in on digitalization in banking. Before we get into everything banking, let me introduce you to our latest project. Behind me is the latest brand new ITP.net logo. We've just revamped our website and consolidated the technology brands to come under one umbrella. And this is our first physical event since the relaunch. I hope you enjoy today's session. Titled Doubling Down on Digital, the discussion today aims to achieve just that. We've brought together transformation and banking experts from banks and technology providers to debate the trends and technologies that are revolutionizing the banking sector. This roundtable will address key transformation questions that are facing businesses today, including the transformation in the banking sector, the rise of the challengers and the fintechs, and what the future of banking and payments look like. I would like to extend a warm welcome to everyone present here and to our audience on behalf of the technology team at ITP Media Group. I'm Sarah Rizvi, the group editor of the technology group. And before we dive into the discussion today, let me introduce you to our esteemed panelists. Today we have with us Stefan Kimmel from Commercial Bank of Dubai. We've Rohit Garg from NeoBiz Mashreq Bank, Hari Prasad Chere from National Bank of Fujairah.
Good morning.
Ala Al-Shami from Huawei Business Group, Kashif Al-Aziz from SAP, and Rahul Mishra from Oracle. Welcome all of you. Thank you for your time. So, first thing that we would like to understand is the impact of digitalization on the banking sector and the customer. So if we can start with Stefan and Rohit now, we're talking about transforming an entire industry. While this transformation started way before the pandemic hit us, it certainly has accelerated its pace today. Now, being active players in this wave of transformation, can I ask you what goals a bank undergoing digital transformation should set for itself, especially in the customer context? If we can start with you, Stefan.
Of course, pleasure. I mean, look, the specific targets any organization would set obviously depends on that organization's very specific starting point, the context, etc. Nevertheless, there's probably three broad themes that I see across probably most industries, certainly the banking industry. Number one is, of course, the big topic of customer experience improvements. Everybody is investing in their channels, in the digital front ends, in order to drive distinguished customer experiences, anytime, anywhere services, improved turnaround times and faster real-time services. We have all built our digital studios and hired agencies to create improved customer experiences. So that is a big theme in order to drive customer experience, also in light of new market entrants that also try to play that game. And certainly banks are ready to play along on that frontier. The second big theme is internal improvements and efficiencies. So a lot of investment has gone into automating processes, STP, AI, straight-through processing, anything required in order to drive our services more efficiently, but also at the right quality, first time right, based on digital processes. So it's an improved, enhanced, effective and service delivery at a high quality. The third and last big theme I see is obviously the realization of new revenue streams. That could be along entering new customer segments that we currently, with our conventional revenue and distribution models, can't easily access, such as the low-end part of the market, as well as new products. Products we can't easily and effectively deliver in-house ourselves in conventional ways can more easily be offered and provided to our customers through digital means and based on new digital investments. So in a nutshell, that's the three broad themes I see as goals for most banks in investing in digital.
Right. Rohit, can you please add on this?
Thank you, Sarah. Pleasure to be here amongst all the esteemed panelists. I hope everyone's keeping safe. Look, I think taking on from where where he mentioned there are multiple facets of goals that every organization will keep. So I'll try and stick to the customer goals. I think the first and foremost, in my opinion, has to be Net Promoter Score, or NPS as we call it. That covers the entire gamut of customer experience, time to market, the speed, the economy, and the overall customer experience. So will the customer or the client advocate the same experience or the same organization to other people? I think that's the primary goal from a customer standpoint. And there are, of course, other goals like we mentioned earlier, which is speed, efficiency, new revenue streams, etc. I think the second primary goal for me is that the banks have to make the transformation or change from being a financial partner to a lifestyle partner if it's an individual bank, or a business partner if it's a SME or corporate bank. Now, what I mean by saying that is that from a customer standpoint, customers want to do banking. They don't necessarily want to go to a bank to do it. So when you make that transformation from being part of their lifestyle by offering them service in an inobtrusive way which is fused with what their primary need is. So to give you an example, people don't want to get a home loan. People want to buy a house and make it into a home. In order to do that, they need a loan from a bank or any other organization. When you're making that change, that the experience of taking the loan is not primary than the experience of taking or building your home, I think you're making that transformation from being a financial partner to a lifestyle partner. If it's a SME, if it's a corporate, and more so SME, I think corporate still has some catching up to do. But if it's an SME, how do you bring all that the SME needs as part of your proposition? So if it's a startup, can you offer him an accounting software? Can you give him e-commerce solutions? At the same time, when he's opening an account, can you do it at a better price? Can you do it at a cost which is much better than what a small business can bargain for? I think that transformation is one of the primary goals for the digital technology from my perspective.
That's great. So I'm directing my next question to you, Ala. Once these end goals are set, it is important also to craft the right strategy that can help you achieve these goals. Now, what would be your advice on how banks can identify innovations which add value to the customer in a way that these innovations eventually help the customer to bank easily, faster, in a cheaper way?
Yeah. So I think, as I agree with what Stefan and Rohit said, it starts from the business side. And I think you also put the question the right way. It starts from the business side, the pain points and the potential they see in the market, right? So every business will have their pain points and they will have their initiatives to address certain segment or potential in the market. And that's what you need to name. So first to say, this is my biggest opportunity that I see in the market. That if I do that, if I will introduce this, function of fintech or payment way, or I add this service to my portal, or this, connecting my system into the National Identification Center so my customers don't need to provide any documentation anymore. So thinking of ideas that if you make, you will enhance the customer satisfaction or increase your revenue or reduce your cost, any of these points that you talked about, it starts from there. And then you need to bring the rest of the ecosystem into the equation. So you need to bring the technology of your own IT department. You need to bring the other players from the market, like our colleagues here in the room, and then sit together in a workshop and start to brainstorm to say, okay, this is what we're looking for. This is our vision, what we want to achieve, or this is our pain point that we want to overcome. What do we need to do? And then we'll start to take that and translate it into a technology solution. Reality today is what we have today we didn't have yesterday, right? Yeah. So today you are talking about 1 gigabit everywhere, right? This was not the case a year back or 2 years back. Today you have a determination on what you are expecting from business continuity, from availability, and the technology can provide that to you. Today you are talking about very low latency, for example, right? So Wall Street was talking about $1 million incremental revenue for every 1 second enhancement in latency. That's how important the technology is to the business and how much it can make an impact into it. The third area is also, of course, the new, if you want, hybrid technology, in the sense that Stefan also talked about AI. You talk about AI, you talk about data mining, you talk about machine learning, you talk about all the new technologies. You need to benefit from all of that for your business in the most cost-effective way to deliver in your KPIs. How do I get all of that together? That was a dream, I think, until a year or 2 years back. Today, the technology can deliver all of that to you.
Right.
So when you bring the ecosystem and sit together in the room and bring someone, another challenge also we have is talking about AI in banking or in any other industry, because again, what we're talking about is happening across industries, Industry 4. So you will have people who know banking or know oil and gas or know their industry, banking in our case, but they don't know AI.
Yeah.
And you will have the developers who know AI, but they don't know banking. How do you bridge this gap together?
Yes.
Right? This is the ecosystem exercise that you bring these people together. Actually, we do provide, and I'm sure some of the colleagues as well and other cloud providers, they provide kind of suites and workflows so that is ready for different industries, for the developers to come and use it and start to develop their applications. But building this ecosystem and getting the right people together, starting from the business point to leverage what's available in the technology to come up with the right solution, to be able to compete also in the market. Talking about fintech, I'm sure it's coming soon in the discussion. You need to leverage that. Yeah, you need to be agile, and definitely starts from the business. Technology follows, and it is a complementary to that, but it is one ecosystem to deliver on the solution.
Okay, great. Now, like Allah mentioned, with new technologies and innovation on the horizon, consumers around the world, they have embraced brand new ways to discover, pay for, and experience new products and services. Now, coming to you, Hari, can you highlight the ways in which customer behavior and demand have changed and how this change has impacted the transformation in the sector?
Okay, rather I put it in a different words. Customer is always king. I'm sure that everybody we always think about, right? His expectations are changed because the technologies have changed over last 10 years. Let's take 10 years, don't take it before that. It has accelerated it. And previously, if I want to call to some other country, I have to go take a Etisalat card and talk. But now I have plenty of applications on my desktop, and I wanted to not only talk, I wanted to see them. This is the customer expectations have increased, or they get increased significantly over the time. Right? Does the banking change at the same time? The answer we all know.
Yeah.
Okay. And is it the right thing or wrong thing? That's a debatable thing, debatable component. So definitely the customer experiences or the customer requirements are changing very fast. They want everything at a split of a second, right? As Stefan mentioned, that one, the service, okay? How the look and feel of the customer experience need to be changed. Can I give iPad to my grandfather and can he do banking on fingertips? Right? Because many of the people leave our parents at native country and come over here and try to do the banking. And can they do it? And the answer, if it is yes, the customer expectations also to be yes. It's not necessary for them to a 70 or 80 year people to go to the branch and do it. That is one. And the second thing is at the speed of light. I wanted to transfer the funds now, and it has to be replicated at that other point immediately. Right? This is from the retail sector. And as Rohit mentioned that one, as a customer, if I totally agree with that point of if I want to buy a house, I don't need somebody to come and give just a loan to me. He has to guide me to make me home. Yeah. Absolutely. I'm very happy for that example. So definitely that is what the customer expectations as an individual retail. Similarly, the same thing is happening in the SMEs. Right? And SME sectors, they can't invest from the day one, the capex, what they're supposed to do. Right? So how a financial institution can guide them to achieve their objective. It's not only from the finance perspective, it's from the all throughout the end-to-end handhold, end-to-end business perspective. And nowadays, it's not about me doing the business. It's about how together we do the business together. It's about the collaboration.
Yeah.
Right? As sample example, if I wanted to buy a car insurance, what we do? Do we go to the bank and do it, or we go to the online and try to search which insurance, which are the features, and try to go to that particular thing, do it. Similarly, the customer expectations for the banking services also is there. Yes, the roots of the banking has not changed a lot, but the feathers, the output, how the customer consuming has changed.
Yeah.
That's the
How everything is getting delivered to the customer, that is what has evolved mainly. Yeah. So now talking about the consumers, the customers, we know that banks base their business on strong customer relations and that are nurtured through better services. Now, technology on its part definitely makes everything faster and with lower investments, but every wave of transformation is accompanied by the requirement for new skills and capabilities for sure, and inevitably, yes, job losses as well. But my next question is to Rahul and Cash. In your experience, are banks investing in training their existing manpower for them to get new skills, or is this transformation only opening up opportunities for new entrants? So if I can start with you, Rahul.
Well, thank you for that. I'm just going to pick up on a few points that Ala mentioned, about the ecosystem coming together. The banking industry is more and more evolving into a marketplace, correct? We've talked about consumer behaviors changing rapidly, the world of instant gratification internally and with the customers at large. The investments that we all need to do, because each industry is going through this transformation. It's just not limited to the banking. And my personal view on this is that you need to continue to invest on your most important asset, which is human capital. We sometimes, because of the transformation that's coming in, assume that what we have is perhaps legacy and redundant, both on technology as well as on human capital. We forget that the know-how, the experience that these individuals they have in their organization is far more than you have. So there's a lot of investments, in my view, that we should continue to do in reskilling and upskilling. That's very important. Yeah. At the same time, the opportunities that new transformations bring in is, yes, you bring in fresh blood into the organization, leverage the technology that is required, and leverage the human capital that's going to be there. Because end of the day, technology is just an enabler. It is the human capital that's very, very important. That's an asset. So reinvest, go through the training process, help them reskill and upskills themselves to the new opportunities that come in. Data is going to be core to every transformation that's going to, we're going to go through. So you got to leverage, bring in the technology and bring that human capital together and say, how do I leverage this to continue moving forward? That would be my view. Yeah.
Cash, if you can touch on the same point.
Sure, pleasure to be here. Thank you, Sarah. So Rahul, just picking up what Rahul has mentioned, in my opinion, you can't have just one. I mean, you cannot have a transformation at a bank without the right ingredient of a human capital. So banks that have tried, or even any organization that have tried to transform in a shift down effect where, there is a will of the organization, but the capability of the human capital is not there, the transformation most likely would not be successful. I think the banks are realizing more now than ever, because there is a shortage of talent. So and there is also an important ingredient at a bank, which is the knowledge of banking. So I think banks are realizing that they need to ensure that the technology staff need to learn business and the business staff needs to learn technology. And I think that's that's a combination that is prevalent. I mean, in the last 2 years or so, I've seen it far more than before, because they realize the change management is a very important aspect. And I think the leadership at banks really need to spark curiosity and experimentation. You have to fail to be successful, and I think that has been, being a banker myself, it's challenging to experiment new things, because there is so much in line with running the business on a day in, day out basis and compliance. It's difficult to experiment. But then we have examples, and I also believe that digital still requires that human touch. I was speaking to a customer in South Africa last week, and while they are operating a 100% digital bank, they still focus a lot on that human interaction when things do not go right on that digital channel. And how do you help a customer on that digital journey, having a face on the phone or on the screen or on the, a voice on the phone? So I think there is a lot of work that folks are doing in connecting that human and digital divide from a contact center perspective or branch frontliners perspective. I've seen a very creative example where banks are actually picking up business leaders, and they're making them as part of a tiger team that is looking at customer journey and improving customer journeys across the board. And so they work hand in hand with technologists, with data scientists, and they come up with new amalgamation of products, segmentation, and that's very creative, and that's needed, right? So both parties learn and bring something to the table. We're even seeing staff that are being digital ambassadors in the branch as well as online. We're helping, as Harry mentioned, the staff, the 60 plus or 70 plus aged banking customers towards adoption of digital, which is far more important now, considering, as per a survey, 40% of the customers would want to return to banking branches. They would rather use other channels. So I think it goes hand in hand.
That's a good point. Now, we understand that banks need to have definite goals for their transformation aspirations, and they need to create a good strategy. They need to bridge the digital divide and reskill and upskill their staff. So the investment has to be not just in technology, but in manpower as well. Having said that, we also realize that the banking industry has some well-established infrastructures in place that you can't just simply ignore. Now, I would like to open this question to everyone. Is there a way to leverage from the technology providers? I would say, is there a way to leverage technology without change to legacy systems? And how are banks ensuring that they just can't forget the legacy systems? They're still in place. They are going digital, so that has to be built above it. So how is that being managed? I maybe start here.
So the answer is yes, and it is done already, and again in the banking sector and outside the banking sector. So the technology is there. So when you are talking, and I think that's a basic requirement of any customer. If I have invested in an infrastructure, and you are coming to me with a new solution or a new innovative scenario, you need to leverage on what I have, right? So if you have a legacy system and you have your own applications and different kinds of data, and you have your own operating system and your own APIs and so on, coming up with new others. So if you have your legacy and you want to buy something from the cloud, or multi-cloud, and you have a new private cloud also on-prem, and you want to have a combination of all of that, different applications from here and there, and maybe at different times, and you have different kinds of data and different sources of data, and you want to have a service bus to deliver a seamless experience to your users, being internal or externally, that's there on the cloud. So we have a platform called Roma, which you can connect all the different applications into it, and then you can also connect the data into it, and you have a seamless experience. So the technology is there. We are not the only provider for it, but you can definitely do that, and it is definitely, I would say, mandatory requirements, because end of the day you need to protect your investment. The second point, which is also very important here, is the agility part. The way I see it, I'm not a banker, right? I'm a technology background, so the bankers are here to tell us if it is right or wrong. But from what I see, the fintech are eating market share from the banks. Globally, it is not a Middle East specific or UAE specific. They're eating market share from the banks, and these are basically software companies, the way I see it. And if they are growing, it's like, again, in the technology, the cloud versus the on-prem, and the on-prem is declining and the cloud is growing. You need to meet somewhere. You need to plan for both. So in my opinion, banks need, from a technology point of view and from a customer experience point of view, to stay competitive and not to lose your market share, you need to have the agility the fintechs are having. To be able to deliver the solutions the fintechs are delivering and to be able to compete with them.
Yes.
Yeah. And hence, in my opinion, at certain point you need to get out of the legacy systems and move completely into the new agile system, similar quote unquote of what the fintech are doing today.
Right. So, Stefan, coming to you, if you can comment on this same thing, how banks are managing the digital transformation, still protecting their legacy systems. How is that happening?
Well, I'd say we don't try to protect the legacy systems, and adding to what you said, I agree. We would probably try to become more agile and faster where it makes sense. Not in every area, and we talk two-speed IT in front office versus back office, etc. And that's all a given. I would still think, as we try to build new things in new ways, in a more agile way, based on the cloud, using fintech ecosystems, using open APIs, and that's the future what we're all investing in. Nevertheless, we can't just ignore the legacy. I mean, that is where all our business runs on. Even if I don't invest, let's say if I don't build anything anymore, I stop building in the old way, in the legacy, and build everything new in new ways, I'd still have to take care of that legacy. You mentioned the integration. If I want to enable myself to even integrate with new services and capabilities, I need to build that integration capability, be it a service bus, be it other means that are available today. I need to first of all enable myself to be able to consume those services. That's number one. Second of all, of course, I don't want to keep running my legacy if I build new things. I need to retire, to rationalize, to basically ultimately bring down the cost and the legacy as I migrate to the new world. So while everything new may be done in a new way of working based on new technologies and services, I still need to take care of managing, retiring, downsizing, and frankly speaking, also in many cases, for many years, retaining my as-is legacy. I mean, if I take core banking, other systems, and there's been famous examples recently in this country, that's not an easy task to do. I can't just retire that overnight. It's probably a multi-year journey to get there. Up until I arrive in the new area, I still need to take care of my legacy. And by the way, by the time I get there, that's already being legacy, because then there's a new thing, and then that's called legacy. So it's a blend and a healthy balance to maintain of moving whatever you can into a more agile, lean and mean way, whereas maintaining, sustaining, and taking care of what you have to take care of, because you still have to run a business on that.
Rahul, would you like to add something to this?
Look, I think the challenge of transformation is because you have a legacy system. If you want to set up a new company or you want to set up a fintech, you have a clean break. You can start, buy new technology and start. But then you also have no customers, you have no business, and you're looking at acquiring. If the only thing which is differentiating you is technology, rest assured that somebody else will outdate you just the way you try to outdate somebody else.
Right.
So technology is now it's not that something new is coming every 3 years. I guess something new is coming every 3 months or every 3 weeks. The challenge of the transformation is how do you continue to do your business and then also bring in new technology. I think the practices of agility or any other faster cross-functional team, project-based approach, collaboration, these are methods and ways of working which I think most progressive organizations are adopting. And that's what differentiated the technology companies, because they were able to develop stuff faster, deliver it faster. The siloed approach of the banks was preventing them from doing this, and I think many of them have changed the way they're working. What is, the old infrastructure, legacy infrastructure is not just hardware. It's also the institutional knowledge of what the clients need. So, Cash had mentioned that, look, relationship management is not something that you can learn overnight. It takes time to understand what a highly regulated industry like banking is. And we are seeing these examples now cropping up across, especially in Europe, where some of the new age entrants are now feeling it difficult to manage the regulation. They're not able to expand as fast as they did earlier because of the capital requirements which are coming up as you set up shops in new countries. So I think the whole legacy infrastructure or the difficulty of managing the legacy infrastructure, in my opinion, is slightly overstated. I think with technology companies like some of them are here on the panel, and the products they're offering, I think there is a seamless path to move from or make the transition from old stack to new stack. Yes, it's going to be difficult, and that's the challenge of managing that transformation.
Okay, that's good. Kash, would you like to add to this?
Sure. So I mean, all my the colleagues here have really identified. To me, legacy. What makes it a legacy? It makes a legacy because the pace of business is changing. 10 years ago, if you were able to create a product in 25 days, it was probably acceptable. Now it is, we're talking about within a facet of sometimes a couple of days to just launch a product. So I think banks, I mean, speaking from my own experience, banks have always been really good at looking at how do we avoid interfering with the legacy and still extend the outreach to the customer. And that creates that spaghetti 10-year legacy cycle. By in itself, legacy is still doing its job. It's the external wrappers that we are around. And sometimes it's absolutely needed because cost of maintaining a legacy or changing a legacy is expensive. I'm talking about core banking applications. These are tall orders. These are large endeavors. Stefan mentioned they can cost you a few points on the stock market on a day in a particular day. So without giving any examples, but nevertheless, it's important that I think the banks are exploring low-code, no-code solutions out there. I think the banks are exploring, especially in the customer outreach area. That's an area which they're investing heavily. Stefan had mentioned, Rohit had mentioned. At the same time, I think embracing the cloud has happened, which was I've been in this region for a long time. 5 years ago, it was a no-no on the table. Now it's why not on the table. I was speaking to Stefan the other day, and they said that's the first preference that they have as opposed to the normal on-premise route. So I think the banks do not really need any newer divine intervention in how to manage the legacy. There is just a cycle that will run where you will increase your external applications, and eventually you'll realize that the legacy is not able to do the job. The idea is to look at those high frequency journeys which are high impactful and high revenue, and then you isolate and de-risk one by one. I think that's what's going to happen at banks. There will be no big balloon knife edge transformation. The transformation will happen in pieces and portions based on the size and the frequency of the business value, in my opinion.
Now, Rahul, coming to you, would you like to add something to this?
Well, I like to pick on what Kash and Steve said. Basically, for me, it's always, what is legacy is relevant to the context here, right? And it's all about the consumer. With changing behaviors, that's out there. How do you keep pace with continuing to service him? That's very relevant here. So whether it's legacy, could be your technology, could be your institutions that we've talked about, Rohit talked about it. It could be any form, out there. As long as we continue to adapt to the changes that are coming in and quickly, whether it's technology, people, any kind of, a resource out there that's going to help you to move forward, we're good. So it's that piece is very, very important. So the goals that you talked about, Stefan, earlier are very important. If those are important to you, then you will continue to invest. Technology doesn't become redundant. It's the business models that become redundant, and then you've got to keep pace to it. Yeah. So whatever is relevant to help you move forward becomes important. That's where we should be looking at.
Okay. Hari, your take on this question.
Okay. So legacy systems, I treat like you take a big tree, the roots and the stem, that is called the legacy systems. And on the top, you get a lot of fruits, flowers, or the other birds, and everything comes up. These are the different things what the consumer looks into it, actually. Right? You want a better fruit, you put right foundation. And banks are grown by having a right foundation. calling it a legacy, as Kashif mentioned, it's because of the spaghetti and it became a legacy. But this is very important. And financial institutions actually exposing a lot of these services to the outside by getting into new kind of architectures that are trying to get it, right? Previously, maybe it's an era changes. There was a time where everybody talks about centralized systems. Then people are talking about decentralized. Now people are talking about micro management. People are talking about at the service level, we need to provide these things. So we need to adapt to the outside world and how our outside is one, but at the same time, are we converting our knowledge that banks acquired over the time? Are we automating it? Most of the people, what we try to do is giving something to the customer is good, but one impact over there, do we know what is the backend impact? How we need to make it automate, right? Because you can reduce the dependency on the core, but you can't remove the core, or you can't transform the core into a new core, all right? So legacy systems exist, it continue to exist. You need to adapt based on the market needs, how the new technology leaders giving what kind of new architectures that we design based upon our customer requirements, right? Because our customer wanted to do the fund transfer faster. There is no fun me investing in something else.
True.
So these are all relative, and legacy is also very relative what we talk about.
Okay, great. Now, moving on to the next session of this discussion, the rise of challenges and fintechs, and I will come back to Stefan and Rohit here. Now, the challenger banks are emerging very fast, and their focus is on digital technology and enhancing online customer experience. But that's exactly the goal that banks have these days. So having a traditional bank's backing, does that give these banks that are now coming up with their own digital-only banks, does that give you an advantage over the challenger banks? So Stefan, your comments on this.
Well, I think as always, there's pros and cons to that approach, like always in life. Certainly, if you look at the success stories so far, and also at the failures, I mean, let's be honest, a lot of the fintechs and the challenger banks and neobanks and whatever we call them now still struggle to make profit. And they've created a lot of hype, they attracted venture capital, they've managed to give out cards to a lot of people and open a lot of accounts. But most of them still, or many of them, with some noteworthy exceptions, of course, that are often quoted, but most of them still struggle to attract salary accounts, to attract cash deposits, and therefore really struggle to make any money. Part of the reason of that is that customers find them nice and sexy UIs, and they attractive and flashy, which you rightfully said, we as banks do as well now. That's harder to imitate, easier to imitate and copy. But what they struggle with usually is trust. I think one of the main handicaps they have is trust, because it's great to have a flashy, whatever colored credit card from a new bank, but it's a different story to give them my salary or my hard-earned cash. And that is what many of them struggle with. And those that have an established institution in the background, a trusted name in the back, would find it a lot easier to gain that trust. And there's, again, plenty of examples internationally where they manage to attract salary accounts and cash deposits a lot faster and therefore make profit even in the neobank part of it. So trust is the one big element. I think the second big element ultimately is compliance, and you mentioned that. The fintechs that often have a tech background, software background, are great at building the new platforms, building the app, creating the infrastructure, setting up the payment rails, etc. But the compliance aspect is a whole different story, and we see a lot of them struggle with it. It's harder to build, and it's harder to get done right. And that's another thing. If I have an established institution in the background as a mothership, and I can tap into their compliance capabilities, it gives me a head start over somebody who's trying to build that from scratch.
Right. Rohit, if you can add to this, please.
Yeah, so taking on from what Stefan said, I think some of the points he's already made, but just to add a couple of more points, I think we got to be careful in terms of what we call as a bank, digital or otherwise.
Okay.
I think from a client standpoint, just having a card and an account is not really a bank. That's the very rudimentary form of banking, which you can attract people with. But later on, do you offer the full service that a client requires? Because the client needs keep changing, right? And as the client needs change, they expect the banks to offer them services. If you're unable to do so, you will not be able to get the primary banking relationship. You will just become a hobby for the client, and he will ultimately have an account with a well-established bank who can meet or match all his requirements. I think the second thing is, again, there is a lot of institutional knowledge of clients that the current banks hold, or the legacy banks, if you want to call them. We've got some experience in this. We've launched a challenger bank called NeoBiz, which is a digital SME bank. And I think the fact that we've been with our clients for 50 years plus helped us design products, helped us take care of things and build systems which leveraged on this knowledge. The client need keeps changing, like I mentioned earlier, number one. Number two, even when it's a digital bank, there is this trust factor that it's an old institution, I can keep my money with them. Having a experience is not the only thing. So, beyond the flashiness, etc., when it's your business which is getting affected, the client wants reassurance that, look, is this bank something that will be well known when I export or import outside the country? Will my customer accept banking services, facilities, trade instruments from this institution or not? Do I have the faith that this institution will support my endeavor, not just today, but over a period of time? Especially for small business banking, clients want to establish a relationship which goes beyond, because they expect to grow fast and they expect their banking portfolio to grow fast along with them. So I think, we undermine the fact that traditional banks have lots of strengths. I think the data and the knowledge, they've been somewhat slow to leverage it. But now that they've started leveraging it, I think the acceptance from the clients is immense. We've been overwhelmed by the kind of response that our clients have given us on NeoBiz. And the fact that, it comes from a well-established institution, carries trust, takes care of their needs today and later, I think is a lot of reassurance for them.
Spoken about trust being a big factor that traditional banks who are now building their digital side, they can offer their customers. Now, something that Ala touched on earlier about fintechs. Now, would you say that banks and fintechs, they are adversaries or partners, and how do you see that relationship? Is there somewhere that they come together, or a new ecosystem probably builds? How is it?
It's your choice. You decide actually if they compete or they come together. But I think I agree actually with what Rohit and Stefan said to a very big extent, that yes, of course, fintech are software companies in my opinion. But the fact also is that they are growing, they are gaining market share, they are attracting customers, certain segment of the market for sure. But the fact is that they are growing, and they are growing at the cost of the banks. Banks are trusted, compared to any other fintech company. The trust is in the bank. This is another reality. The biggest opportunity is what Rohit said, is if you as a bank start to realize that there is an opportunity here and I have a threat maybe coming from a competitor because he's eating from my market share. So instead of him eating me, I start to eat myself. So I start to build my own digital banking. And again, having the intention or the vision is something, and executing and delivering and being able to compete with this digital banking of your own is something different. But I think the strategy of having your own digital banking alongside with the traditional banking for the rest of the segment of customers, whatever it is, and start to compete with the fintech, in my opinion, is the best way, because you have a key competitive advantage, which is the trust. This is key for them. Of course, in the rest of the scenarios, from a fintech point of view, they cannot survive without the ecosystem. For the banks also, you need If you want to move to the fintech or the digital side, you need the ecosystem as well.
Yeah.
So it is a competition in one hand, but it is also a partnership in the other hand, in my view.
Cash, if you can add something to this, the partnerships between bank and fintechs, is this something that you think is going to happen, is happening right now?
So I think that just like any other business relationship, if there is a win-win, then partnerships evolve and partnerships strengthen. I don't see that differently here in fintech. I agree with Rohit that trust, aside from the trust factor, this life cycle aspect, right, where a customer sees the bank across all aspects of their life cycle and expects the bank to respond to those needs, it's going to be difficult at fintech. Fintechs are amazing in attracting customers, and I think there's a lot that banks can learn from that, right? And banks have learned, right? So almost all big banks on a global level have opened their digital window. Some are very successful and some are struggling. And while there might be many reasons for that, I think that there has been significant investment in fintech by the banks. Why? Because they treat them as customer-centric R&D labs. Because they bring that culture. Fintech brings that culture and that mindset, because they realize that their hands will be tied in offering a handful of products: payments, person-to-person transfer, deposits, and loyalty. But obviously, banks have a plethora of projects of products that they can offer. I think banks are trying to learn from fintech. There are collaborations that I've seen. SME banking, there is a huge collaboration. Fraud, a lot of collaboration between fintech and banks. Recently in collections management, collection traditionally has been a very brick and mortar business for banks. I was speaking to a few CIOs after the pandemic. The first team that landed in the bank was collections. And I never realized, because I was not accustomed to that area. I was in operations and technology. I didn't realize why. And they said, well, they have to collaborate together because they have a goal target, and that's how they manage collections. And I have a fintech that is working with that bank now in automating and digitizing the collection process in a very different manner by extending the outreach to the customer on a digital channel. And their payback ratio is 7 times more than the collections unit. So where there is a win-win, the banks will acquire, the banks will experiment. And I don't think that fintech will pose a lot of threats. I think fintechs are more eager to collaborate with banks than the other way around. But I think post-pandemic, there will be more broader collaboration, because fintechs are also getting wiser in terms of being very niche areas. The more niche they get into, the better off they are for banks. The more broad they get in, the more focus they will lose.
Okay, now like we just discussed, like Cash mentioned just now, that if there is a win-win situation, of course, there are possibilities where fintechs and banks can actually partner and have a mutually beneficial relationship. Now, Rahul, just building on that, what do you feel is the future of this digital revolution in banking that we're talking about? Is it developing technology in-house? Is it partnering with fintechs, or just buying up small fintechs? How do you see that emerging?
I think what Rohit said, Ala said, my colleagues have pretty much what works for you. It's a combination. If you've gone ahead and invested into to address that market from a traditional bank, open a digital bank, or you partnered with a fintech to address that market, or you acquired, the entity, it's the business model. You're addressing a target audience. You want to service in a segment of the market. You want to make sure that to do that, you have the elements in place. And if there is a potential partnership or collaboration or coming together, it could be the same. Or you might just realize that you've got something which is unique out there, and there is not really out there that can serve that uniqueness. You can probably build upon it. So it's depends again, how do you service that piece and what elements can come together to do that at that point of time. So the options are plenty out there. What works? Mashreq Neo has taken certain forms of addressing that market. We see a lot of that happening in Europe, and especially in the Americas, the banks doing that. And the current situation, the pandemic, which Kash was talking about, is going to literally change the way these entities will, come together. We're already seeing a big change out there. We talked about fraud management, collections, areas that are very, very unique for the banks to serve. So the options are plenty, and what works for to address that market is very important.
So, Rahul just mentioned what works for the banks. So, in your experience, what does work for the banks? I asked about whether it's developing technology in-house, whether it's buying up small fintechs, whether it's partnering with them. What would you say, what does work for the bank?
Again, it's quite unique to what your starting point is and where you already have strengths, where you have already invested in an in-house capability versus where you still have some catching up to do. So I'm 100% agreeing with you. It's what works. I think ultimately, we'll probably have some core traditional capabilities that are easy to serve for a bank, starting from opening an account, giving a loan, most parts of payments. That typically are easy to do in-house. Nevertheless, many of those already have quite strong fintechs on the market that are easy to partner with, and that can give you an additional edge in terms of offering additional supplementary capabilities at a lower price, at a broader international scale, at a higher speed than what you can do in-house. And that's the niche, the pockets and niches where you want to partner. I think the key is to make the decision as a bank yourself, where you feel you at least as good or better on your own with what you do. And even then, you don't have to build it fully in-house. You can still partner with it's traditionally called a tech vendor that helps you build that capability, but you run it in-house, versus where you partner with an external fintech, being somebody who provides the banking service for you, and you partner with that. And that's both on the product delivery side as well as the go-to-market. One area that almost all banks really struggle with is the so-called underbanked low-income segment. It's called underbanked for a reason, or unbanked, because we're really bad at serving them at the right cost, at the right service quality. That's another classic example where it offers itself very well to forging partnerships with somebody who's really good and specialized at serving that customer segment. So it's pick and choose, as you rightfully said, and it's very unique usually to where you already have areas of strength and where you want to play.
So now we are entering the final session of today's discussion to discuss what the future of banking and payments look like. Now, as we discussed just now, a lot of banks have already embarked on their digital journey and digitized the bank experience to boost customer engagement. Now, if again, this question is open to all, but first I would ask the technology providers, if you were to give advice to a bank that is just embarking on this digital transformation journey, what would you say is the key area that they should give special attention to? So, Ala, if you can.
Yeah, I think Stefan also touched on that on the first question. It's end of the day, it's about the business, right? So, where is your biggest opportunity? Where is your biggest pain point, right? So, if we look from a customer service point of view and customer experience point of view, I think this will be the first area to look at. And we derive everything from there to come to the technology and, of course, to the human capital and what development you need to do to capture this opportunity. And the opportunity and the threat at the same time are there, in my opinion, as a customer at least, because of the fintech and because of the technology, right? The technology is evolving. I think Rohit also is referred to that, and it is evolving every day. In 5 years' time, we'll be talking about 6G, by the way, right? So instead of talking about 1 gig everywhere, we'll be talking about 100 gig everywhere. Instead of talking about 20 millisecond latency, we'll be talking about less than 1 millisecond latency. Yeah. So everything is evolving and developing. Customer experience is also developing and evolving every day and changing every day. So this is one area definitely that needs to be looked at, and everything needs to be driven from there to leverage on the technology. Technology is a key component in the equation, but it's an ecosystem. The second area, which is also very important, is from an internal process optimization point of view. Just to share from a different industry experience, for our own organization, we looked at this area and how do we optimize it, leveraging on the digital technology. And today we have 190,000 people, right? Professionals in the organization. And now it is 198 because we have 8,000 digital employees in the organization. Yeah. So when you look, and the saving of that is 7 billion Chinese currency, almost $1 billion every year. Yeah. So don't underestimate how much you can enhance and save as well when you look internally on the automation of the process. But to me, again, customer first, we're all here for customers. Second, I will also look internally and I will drive it the same way. The ecosystem starts from the business, and then I need to get the ecosystem together to decide what is it that we need to do next. Because again, as a technology, I wouldn't know about the banking per se. Bankers wouldn't know everything about the technology per se. AI developers wouldn't know anything about banking and maybe partially about technology. So you need to get everyone in the room, people who are making devices, people who are making the cloud, people who are making the connectivity. These are different players. Yeah. You need to get everyone of the ecosystem into the room, say, okay, listen, this is my vision, this is what I want to achieve, or this is my challenge, this is what I want to fix. Let's come up with a solution. And then, of course, and there you put your priorities. In a sense that you don't try to do everything, because then you will fail. I think Kashif was also referring to that. But you look at the most important part with the highest return on investment, biggest impact on the business, and I go in the priority one by one, and then step by step you will get there.
So Allah talked about a return on investment. Kash, what would you say is that key area of attention that somebody starting on this digital journey, not just somebody, a bank started on a digital journey, should pay attention to?
So I agree with Allah in terms of technology is an enabler in this. In a digital journey, when you're embarking on that, it's an organizational change. So I think the right business focus, which target market are we going to go to? Is there a segment that we're going in? Is there a particular business we're going in? It's absolutely important. And I think that focus then drives that high frequency area where you know that the opportunities are high and the revenue base is high as well. And you sort of formulate your strategy around that. The second aspect is the organizational acumen that is there. Who's leading that effort, and what kind of people are they assembling to lead that? Because that needs to be very important from a change management perspective. I think then comes technology really. From a technology perspective, really what every digital journey has to have embedded is the frictionless journey of a customer. So the focus from an end customer perspective and how frictionless that will be across all channels, to me that's the utmost thing. Otherwise the journey is going to break, and we've seen that even in times of pandemic where a lot of financial institutions rushed up to create an offering which they had to because of the branch network being down. And as the broken areas of those journeys emerged in the customer lifecycle, the call center ratio of calls was through the roof. And obviously that was pushing the limits on the other side. So I think the seamlessness in a customer journey has to be the utmost importance in defining and designing what a bank intends to do from a business transformation perspective. Technology, again, is an enabler.
Now, Rahul, your 2 cents into this topic.
I think my colleagues have pretty much covered everything, but I always like to focus on the core. Mm-hmm. And the customer is centric to everything that is being done here. You're a traditional bank opening a digital, engagement with the customer. You bring your own strengths there. Preferences are changing, behaviors are changing, customer loyalties are non-existent. I bank, as a personal example, with a bank 15 plus years. What do I really do? My salary and my earnings go into the bank. But perhaps I avail everything else that you talked about, lifestyle, from somebody else. There's another provider out there who services my needs, maybe 1 or 2 or multiple over this period. So to Kashif's point, the customer experience continues to change. His preferences are changing. And if you do not serve that, you find means to serve that in his evolution, then you're going to miss out. So you have to look at who's really my customer, and am I going to leverage, as we sometimes call, our captive audience, which are installed, the customers internally, because the acquisition of customers is extremely difficult. New customers, expensive. Needs are unknown. Profiling of your existing install base, your customers is very, very important. Seeing how you can really partner with them as they move is important. So if you get that piece right, then technology will support. There is plenty of technology out there that will help you, irrespective where it's coming from. That would be my 2 cents.
Okay, great. So Ala, Cash and Rahul, they just touched on the areas where banks should focus on if they are embarking on their digital journey. Now, coming to this side of the table, what are the bank's core plans and strategies to accelerate technology investment and take this journey even further? So if I can start with you, Stefan.
Yeah, thank you. Yeah, look, I mean, first of all, fully agreed with what the technology colleague said. I'd say one key element in that, and Cash touched on that as well, is it starts with, or a key component in that is putting in the right team who can really, really drive that. If you leave that transformation journey, driving and pushing digital, to people who have been doing nothing but traditional banking for the last 20, 30 years, they will struggle. You need to put in a team who comes from a different background, so-called digital natives to some degree, people who know what good looks like, what best in class looks like in a digitally enabled world, and who know how to get from where you are to where you want to be. Because that journey is not trivial. Yes, the technology is easily available. It's probably easier than ever before to plug into it. It's via API on the cloud. It's easier than ever before. But knowing how to drive that transition, drive that transformation, that really is, and building the team who can really do that, being enabled from the top through an aligned top management team is the absolute key to success in my view. And then after that, it's really priorities. As Ala was saying, figure out where you have the highest impact, because the digital journey is a huge field and it's a long trip. It's not a sprint. I mean, it's a multi-year journey. So putting your effort where you get the biggest bang for the buck, focus there. Make sure you get enough quick wins on the way so the organization doesn't lose interest and faith and hope. That's really the key to success in my view.
Okay. Rohit, if you can add to this.
Yeah, most of it is already covered, but just a couple of points. I think for any transformation agenda, setting the goals is most important. So you don't transform because you want to become digital. Digital is the means to a strategy. It's not an end in itself. So ultimately you want to probably deliver a better customer experience. You want to reduce your cost. You want to cross-sell more. You probably want to expand your market and overall become, get a lot more market share. So I think we need to be clear that that's the objective. I think the human capital, you cannot understate or overstate the importance of that. Getting the right team who can think out of the box. If you continue with people who've been doing stuff in a particular manner, there's no change coming. So, people who are more curious, who question, etc., etc. I think the third thing is also that having the appetite to fail and allow people to make some mistakes is very critical. So you fail, but you fail fast and you do incremental steps. Traditionally, highly regulated institutions such as banks don't have an appetite for failure. So if you if you fail a little bit, you typically pull back the whole initiative. Traditionally, that's been the approach. But having the ability to make incremental changes and fail fast and then move on, I think is also quite critical. And last bit is you have to work with the regulators to try and see if new technology adoption is possible. And I think that's where there's a lot of change which is happening in the last couple of years. The regulators are more willing to support people who come up with new technology. They themselves are trying to make that traditional, change that traditional approach and adopt technology. And the central banks have a fintech cell now within them. But if you just go by the regulation and wait for the regulation to change before you even think about making a change, you'll again be behind the curve. So you've got to stay on the edge work with the regulators, and I think they're quite supportive as well. So,
Hari.
Yep, I think most of the things are my team, my peers are covered. One thing is, 2 points I wanted to cover is the approach, how we are trying to take it. When we launch a product previously, banks used to create the product and then that too is to market. But that is a in-out approach. We create the product and try to send outside. But the challenge has to be now it's out-in. What the customer want, how fast he want, and then change the product as per that. All right, that is one. And the second thing is, we call it as a digitalization or innovation, transformation, multiple elements we are getting into it. Culture plays a very key role. You might be forming a small team and only they are doing the transformation and other people are not known where the organization is getting into. They have to incline towards that, right? So the culture playing role, everybody need to take their part in the organization. What the organization moving forward. Small example I will tell you. When we call one of the contact center team to check it out, what is the biggest issue? He says that, sir, I'm getting daily almost around 100 to 200 password reset requests coming from the customers. So the first point what we targeted is, all right, out-in came. And we removed the password dependency for both retail, corporate. They don't use the password to log into our online banking. As soon as I saw that, and we given a small, that is an appreciation, he's a champion for the transformation. Now we transformed 52 processes using bot within the organization. And this has been initiated by the individuals, not by the subcommittee or something. This has been initiated. They say that I'm doing these kind of the processes on daily basis repeatedly. Can somebody help me so that I can concentrate on better work? So that they are encouraged to innovate themselves and then try to learn something new. So this culture component is very important in any organization if you want to transform. That's one.
Now, final question for this discussion. The biggest change that you expect to see in technology in the banking industry and the technology for the banking industry in the coming years. So that one thing, that biggest change you see in banking.
Biggest change? Well, I think for this region specifically is now that the regulator is supporting us and the availability of offering is there, is technologically speaking a massive move into the cloud and the APIs that are already available there. It's again a matter of not having to build everything in-house, to build your own capabilities, build the infrastructure and the OS and the application on top and the maintenance and everything around it, but being able to essentially get on the cloud and tap into everything you need via APIs, more or less, is an absolute game changer in terms of the speed, the agility we can move in. That's already much more adopted in other geographies. I think we are now at a verge of really making a major jump, a major leapfrog into that era as well. So for this region, I think that's the biggest technological jump at the moment.
Rohit.
I think 5 years is a very long time. If anything, the pandemic has taught us that you can't foresee what's going to come. But look, I think it's a great time, from a technology perspective. And I will give you a small example. This country, 90% of the people remit money. Mm-hmm. And for people who've been here, they would remember that you had to queue up cash in hand in physical outlets for a very, very long time. And I think in the last 3 years, this has changed dramatically. Most banks are now offering you can money transfer on the mobile, few taps, instant, etc. So I think there's a dramatic change which is happening. I don't think 5 years ago anybody could have foreseen that. So I think the biggest change that I foresee is the evolution of the ecosystem and the integration of banking services into that. Banking as a standalone service may not be existing. The needs of the client will be met, and banking will become a lot more background-centric activity rather than foreground. I think it will get integrated to many other customer journeys, multiple examples of that. I think that's one change that's certainly it looks like it's going to be coming.
Hari, the next big change.
Okay, so obviously, definitely, I do accept the other peers. But to sum it up, the concentration or usage of the consumption of data, it will change. It will definitely change how the banks look into the data. Not only the Googles and big guys do it, now the banks will also try to do it, what they can do with the existing data, up to the level of sharing with the APIs to the relevant fintechs or with the collaboration with the other third parties. The data element will be changing. Whenever that change happens, the cybersecurity element will increase. If you see the last, in pandemic at least, everybody went to digital, closing the actual retail branches and try to get into the digital. The number of cyber attacks have increased almost 300 to 400%. And the dependency of the digital doesn't come free of charge. It will come with these threats and it will accelerate like crazy. And the fraud element, where the regulators play a big role with respect to the data privacy. And this part of the world, data privacy is evolving and people will invest more on it, and end consumers also feel that one data, my personal data, is very important. These are three key changes that we are expecting.
Rahul, come
Well, I'm going to pick up some points that my colleagues made here. One of the things that's going to be fundamental is I, as a customer, will try and monetize this data as open banking is going to become more and more prevalent. If you want to use my data and you want to sell me more services through the partnerships, for the collaborations out there, and this data is vital, it's my data. As a consumer, I think there's going to be a lot more demand on how you're going to use my data. When I talk to a few of my colleagues in the banking team, friends in the banking sector, they're starting to see the concept of lifestyle, banks becoming a marketplace, and it's all about the consumer's data, the customer's data. Customers are going to decide a lot whether I will allow you to use it, if I will allow you to use it, in what form and shape, what do I get in return for you to do that? Because end of the day, yes, you're going to make something out of this. So the different thought elements coming up and how this is going to be used. You talked about the consumption of data. So it's going to be an interesting time over the next few years to see. And going back to what Rohit said, we never know how quickly this is going to happen, where the customer's demand, the industry's ability to serve that demand, and the whole concept of banking changing. It will continue to have its roots in the traditional form, but what more? What more? It may be just another a mall that you would walk in to, which has a number of avenues to serve you, right? And it's all about the customer and his data. How do you serve that need?
Yash.
So look, I think there is a very consistent thing. The two things that are absolutely important, and then there is no doubt in this. So I think banking as a service, you could call it platformification, you could call it open banking, whatever name that you would call it. The fact of the matter is that about 80% of banking executives are looking at partnerships, right? And this is not just fintech partnerships. So we will see, and I completely agree with Rohit, we will see banking in a very subtle form. It'll exist across all of us, but it will not be a very brick and mortar style. It will be very lifestyle driven, because that's what we're demanding as consumers. So the collaboration of banks and in a banking as a service with retailers has already started to happen, with auto manufacturers, with insurance companies, with content aggregators. This will be prevalent, and I think we will see lesser of brick and mortar. People wouldn't even realize who are they banking with, but they're going to be served as a banking customer. And I think Google called it data as the new oil. It's not so appropriate to say it in this part of the world, but I mean, it looks really cool when you say it in the Western world. but data is certainly a new currency instrument in the world of banking, and I think that there will be tiers of data that the banks will say this much we will share, but this much is our intellectual property, which is the lifestyle data. And I think it's going to be very, in the next 5 years, we're going to be talking about tiers of data that you exchange and tiers that you will not exchange because that is your own IP. And that is where we're going to see these changes.
Allah, finally, yes.
Yeah, I don't have much to add, to be honest, but I think just to confirm on the same point, I think as a user, when tomorrow I try to do my banking from my phone or from home, I would expect that I have an experience like if I'm getting into any social media page. Yeah? And my bank will know when is my birthday and when is my wife's birthday, and someone is getting married soon, will start to get offers for honeymoon. Someone wants to change his car because they got the button, the system got the button that he changes his car every 3 years. And what kind of cars, luxurious cars or economical cars or whatever, all this will come from the system, and then it will make it easy for that to happen. Yeah, and I think that's already said by all the colleagues here. For this to happen, and talked about the technology and the data, for this to happen, you need to have a lot of technology enablement. You don't have all this technology today. So I think the AI will gain more maturity and the machine learning will gain more maturity. So you will start to have much more digital people in your organization. That's one. Second, as I told you before, I expect 6G to be in place in 6 years. So literally, we'll be talking about less than 1 millisecond latency and 100 gigs connectivity. Of course, when you have this service, you will have a lot of devices to connect, right? And you will have a lot of load on the network. And you will have a lot of computing power requirements. When you are talking about digital people, you need to have a lot of AI power as well in the background. You need to have all of this technology, and you need to have it at the maximum speed to be able to give a good customer experience. Because end of the day, if I'm logging in and I have a very nice page, but it's taking very long time because I don't know, it is whatever Friday or a special day of the year or Christmas, and all of people are getting into the bank trying to buy something or do something, and there is a bottleneck, then it becomes an issue, right? So unless you have the right technology behind that, you will not be able to do it. So maturity of AI, a lot of digital people in the organization, 6G in place in 5 years' time.
Okay, thank you. So we can see that digitalization has led to disruption in banking, and more importantly, it has challenged conventional practices, and it has opened room for new kind of partnership opportunities and made it possible for new entrants to actually provide new products, or at least some push to innovate further. Now, today's discussion completely highlighted how important it is to digitize core processes, make sure the banks still have their legacy systems, which, as you've discussed, form the core of the roots of the system, and we are building upon it to make sure that customers are getting served more efficiently. So let me close this by thanking all of you for your time today and your insights and inputs into the discussion. It was an absolute pleasure speaking with you, and a final thank you to our viewers who have joined us today. We hope that you were able to take away something of value from today's discussion. So thank you.
Thank you.
Thank you, Sarah. Thank you very much.